Good morning, traders. It is 8:02 a.m. Chicago time on the 17th of May, 2016. It's a Tuesday. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overnight sentiment is to the risk-averse side. The market is in a flight to safety sentiment. Crude oil leading the pack. Crude oil got up as high as $48.42 on NYMEX, currently trading at 47.74, up 0.06%. The leader in the pack is the U.S. Treasury bond, up 0.08%, trading at 165 and 21 ticks. And then followed by gold. So clearly the market is in a risk-off sentiment. We want to follow the money flow as much as possible. The key news items, other than crude hitting this 6-month high, is the UK inflation slowed to consumer prices increased 0.3% year over year in April, down from the 0.5 gain in March. This reading marked the first time in 8 months that UK's prices slowed from the previous month. Other than that, we had in the U.S. we had April CPI month on month at 0.4 versus 0.3, a slight beat. CPI ex food and energy at 0.2 in line. And then housing starts this morning came out at 7:30 Central as well. Housing starts came in at 1.17 versus 1.13 expected, slight beat. Building permits 1.12 versus 1.14, slightly lower. Looking ahead today, and also we did get the Home Depot release. It beat $1.44 versus $1.33 expected. 22.8 billion in revenue, 22.1 expected. Pretty strong earnings from Home Depot, large revenues there. Looking at the rest of the session today, we're anticipating industrial production month on month here in about 10 minutes. And capacity utilization, industrial production expected at 0.3% for April, cap utilization at 75 for April, and that pretty much clears it for the day. As far as speakers, we get Fed Speaker Williams and Lockhart at 11 o'clock Central, noon Eastern U.S., and then at 12:15 Central, 1:15 Eastern, we get Fed Speaker Kaplan. As far as earnings, I don't see anything big after the market. WTI June 16 options expire today. So that's pretty much it for the news. Oh, and also for those of you on Twitter, Twitter's going to be changing its tweet limit of 140 characters. That limit is not going to include links or images. So they're extending the number of characters you have on Twitter. I use Twitter extensively. And then finally, we have an AMA today at 3:30 Central, 4:30 Eastern. We have a ton of questions. We're going to see if we can condense those to get as many answered as possible. Let's have a look at where we were yesterday. Here, let's see. So here's a look at our trader bite yesterday. Hang on, I lost my spot. Let's track to where we need to be. This here was Hypo 1 yesterday. The expectation on Hypo 1 is a drop, a slight drop, but the overall Hypo is looking for higher prices, targeting the 51 area. The extended target would have been 61 and a quarter, but yesterday exceeded all those. The primary Hypo was higher. It would have been nice to get some push, some sort of flow down a base that we can trade off of, get long off of before the rally. But even though Hypo 1 worked out yesterday, it did not get any selling at all. It basically had an open rejection reverse um, with a slight drive to it. I gave an early warning as to the fact that it is taking off pretty early. But if we look at the open yesterday, we see here there's some hesitation. There's some hesitation right off the open. That's why we went with the open rejection reverse. It opened, pushed down, rejected this the flow down towards responsive towards the point of control. I was looking for in Hypo 1. I was looking for a push through the VPOC, an attempt at 40.50, and then up to 51, 51 and above 61 quarter. That's what I was looking for, and what it did is it pushed very early on, and basically yesterday was a complete channel up. Channel got steeper later in the session, but overall, it took back what we did on Friday, just a complete reversal. Note though that prices climbed from 43.50 to about 69, 68.50, about 25 points positive, positive rotation on the day. Look at the delta for the day. Starts at 0 with the open, and the delta just absolutely drops as soon as we make this high here at 61.50. As soon as we got to 61 quarter, which was our primary target, the delta started dropping, and it just did not recover, even though prices ended up higher. It's very interesting to see. It's showing what that's showing is essentially one of two things. One, the offer is light, and therefore those lifting the markets are lifting it with light volume, but the price is moving up more on offers being canceled. In other words, price rising, delta not rising. Delta, in order for delta to rise, there has to be volume to lift or some aggression on the buy side, right? So the way price moves up, the way price moves up with the delta going down is one of two ways. It's either cancellations or sellers retreating, offers retreating, or the other way, as price goes up, somebody is hitting the bid, hitting the bid, hitting the bid, hitting the bid, and that happens a lot in futures because futures are a hedge instrument. And so, to me, yesterday there was a fair amount of volume, and in looking at the book, it's clear that what was happening is as price went up, there was a lot of aggression on the sell side throughout the afternoon, and as we could see, the result of that is the market selling back, actually giving back approximately 14 points from the high yesterday, 13 points or so from the high yesterday. So with that being said, I want to bring you back, and this, I know I'm kind of rambling on here, but there's a lot going on in this area. I've brought this composite back a few weeks, and I want you to just watch what happens here as I incorporate more and more days in this composite. Watch what happens to the black line, which is the point of control. So the point of control there is at 20, 40, 50. 20, 40, 50, that's where it's at now. And as I incorporate more days and then the market trades down into that area, you see this, it's bouncing back and forth over time, and we are stuck here. And we talked about this, I believe, on Thursday morning or Friday morning's Trader Bite, that don't expect it to, I would not expect it to drop right through this area from the all-time high of 21.05 quarter all the way down to 2015.75. It is likely to get tangled up in this high volume area. So as I move forward, as I move this profile forward, you can see that it's teetering, the point of control is teetering back and forth. And we are right on it. We're trading 20.58 a quarter. The point of control is right here at 20.55, 50 or so for this entire run from late August, from that big drop in August that triggered curbs or triggered the limits in the ES pre-market. So I'm charting everything that's happened since that drop, and you can see that there's a ton of volume here that we have to contend with the cutoff point being 2015.75, and the next most important area being 2026 up here. And so this is where we are. And if you're wondering why is it rallying, then selling off, and then rallying, and then selling off, I'm going to tell you that that is what we expect at a high volume node, especially a point of control. We expect a lot of chop. For those who watched webinars 1 through 4.1 from my website, should already know this. But if you look at these days, let's clean this up. If you look at these days, we do have um, we do have rally, drop, drop, rally, an attempt, rally, drop, rally, and then this morning we are dropping, and it's just a market that is imbalanced. And so what you have to do is really watch what happens at the open. It's so important to keep an eye on what happens at the open, and then look for which side is taking control, which side you can lean on, and then move from that direction. Do not hold on to your trades very long in balance. There's a lot of chop, and generally the OTF does its work and steps out of the way fairly quickly. And so you cannot, you can do whatever you want, but in my opinion, you don't want to stick around very long when that happens. So yesterday moved from the high volume node all the way up to where it moved right to the next low volume node. You can see that on the chart here. We moved to this price here and turned right over. That price is approximately 69.50, which happens to be the overnight high. These are not coincidences in price. As I was telling the room at stage 5 yesterday, for those who have these flex levels, you've probably noticed how the market responds to these levels here, shown on the right. These levels, there tends to be a reaction whenever you see those levels, and it's not because I have these tremendous top secret levels that you should pay a lot for. It's nonsense. You can put these up yourself. I show you how to do those in a lot of AMAs and a lot of videos on my website, including 4.1. And it's just the market responding to the auction. It just continuously gyrates and rotates and tests and retests, and we would love to have a failure. In fact, I would love to have a failure below 2035 that holds, so we could start running for 2026 to change the monthly one-time framing. Would love to change that monthly one-time framing, and start to bring in some volatility here for the summer. Now I showed you all. So here's the monthly. Yesterday we did a full review. So you can see March, very wide range. April, pretty decent range, and so far in May, halfway in, we've basically moved from the high volume node from below, and we have not tested the high volume node from above. But if we look at the weekly, I outlined yesterday, if you recall, I outlined how it's one time framing up, caution shorts, right? So we held the one time frame up yesterday. We are one time framing up on the weekly, and that's what I said. I said a swing on a swing basis. You'll want to be looking more long than short. And yesterday gave us that rally. That also continued. That also played out and drove the primary hypothesis. So yeah, this morning the market rallied overnight into it was very quiet in the Asian session, rallied into the European session, and has been selling. And the expectation is that we would likely continue doing that this morning. So overall, the primary hypothesis, again, I'm covering a lot today and I'm hopping around a lot. You just need to bear with me here. But the primary hypothesis this morning is I'm looking for a choppy open auction in range. I'm expecting it to test the point of control and the close of yesterday, which are at 62.50, 63, and then I'm looking for a rotation back down through to the 51. I expect it to chop around there, and I'm looking for it to continue lower towards the 40.50. I don't expect it to get there. We're setting up um, for tomorrow's FOMC minutes as well. But that's my primary hypothesis: is it attempts higher and then starts rotating lower. And then the secondary hypothesis, again, chop, an attempt lower. A lower attempt is likely to test this 53 area, and then I'm looking for a bounce. If it's able to bounce, then it's likely to complete the continuation and start testing that 75.75, the upper HVN. That's the secondary hypothesis. If it does not, if it fails through, then you're basically on hypo 1 and it just continues lower. Okay, that's how things are shaping up this morning. I want to remind you again, AMA 3:30 Central, 4:30 Eastern, U.S. time today. The questions will be closed in a few hours here. We'll try to cover as much as we can, hopefully bring you up to speed on what's going on with the auction and so forth, so you can incorporate it into your method as opposed to replacing it. You don't want to replace what you're familiar with, but you can certainly incorporate the knowledge into that. Good luck, and I'll catch you tomorrow. Take care.